Here's the current market update for Intel Corporation, stock ticker INTC. So as we can see, the share price for INTC has taken a major dive over the past few hours. This follows a very disappointing earnings release. I will be releasing a video that's more in depth on this. I will be going into greater coverage of what exactly happened here. But the short summary here is that earnings per share came in at 2 cents adjusted versus 10 cents per share expected. The revenue figure also came in worse at 12.83 billion against expectations for 12.94 billion. This is a 1% revenue decline year over year. And the company swung to a 1.61 billion net loss, or 38 cents per share, from net income of 148 billion dollars, or 35% per share during the same quarter last year. So overall, we can see that the share price here has been dramatically affected. The guidance was also weaker, much weaker than expected. And for longer term investors, the most significant development here is the fact that the dividend is going to be suspended here during the upcoming quarter. So overall, share prices have seen some tremendous movements lower. This is obviously based on the news that was released overnight. We will have to sort of revisit the share price action here so that we can sort of come up with a game plan. But most of the people that are trading this stock are generally looking at the longer term investment here. A lot of this investor activity has to do with the development of foundries within the United States, and obviously this is a long term investment. But for the most part, this latest earnings release did take the market by surprise. There are a lot of chip makers that are currently falling at the moment based on this information. So this has become a story that is not only an Intel specific story at the moment. We're also seeing Nvidia fall currently, and it's largely based on the reaction that's being seen to this latest news. So currently, we can see that we've got a fairly significant price gap here in share prices. I can sort of shrink the chart here so we can see it a bit better. But currently we're trading just above the $20 mark, just below 21.50. And as we can see here, there is a very significant price gap here. We're really seeing prices move from lows of roughly 28.89 down to the current high, which comes in at 21.98. So there is a fair bit of room here that is going to need to be recovered. And what's interesting here is the fact that overall, looking at the size of the price movement to the downside, we can see that we're roughly coming in line with a 2.618 Fibonacci extension, which is not something that you normally see in the market. I think a lot of this is due to the fact that not only did we get an earnings miss here, and there is news of layoffs of 15,000 people, which is going to be 15% of Intel's total workforce. We do have weaker guidance figures, and we also have, the suspension of the dividend, which is probably the most devastating blow to people that are trading the stock long term. Needless to say, this was not expected. This has really taken the market by surprise here, and this does show that the company is sort of focusing on its, longer term goals rather than shorter term profitability. So currently, as I said, this 2.618 retracement here does come in just below the $20 mark. We didn't quite reach that area. We did see lows of $20.42, but this has created a very significant price gap on the chart itself. So overall here, my expectation is that we have likely found the lows at this point. I mean, the news is essentially in. And there is a weaker guidance figure here going forward, but what this will ultimately create here is a climate of lower expectations. To be fair, I mean, these are historic events. I don't think anybody was really suggesting anywhere that Intel was going to be cutting its dividend. There are not many technology companies that offer a dividend. We're seeing a few companies start to do that more recently. Facebook and Google would be examples. But even still, that's a fairly small dividend offering. And generally, what you see in technology companies is that they reinvest that money rather than returning it to shareholders. So, Intel was sort of an exception within that group because they did offer a fairly attractive dividend while offering exposure to the technology space. So, currently, we are seeing massive declines here, but whether or not the damage here can continue does seem to be a bit extreme. We've already reached this 2.618 Fibonacci extension zone, which, as I said, is not a common occurrence. This is not something that you see very often. Overall, the expectation here, in my view, is that a lot of the damage is in here. If you start to exit positions now, you really are going to be looking at exiting at the lows, which can be a dangerous proposition. But overall, the question really comes down to, whether or not Intel will continue to disappoint market expectations. In my view, what has happened here is that Intel has now set the bar so low that it will be much easier to clear that bar going forward. Um, there is the reality here that investors will not be able to capitalize on that dividend to sort of collect that money while we wait for the stock to turn around. But you have to sort of balance that with the viewpoint that exiting positions at this point does mean that you're exiting at the lows, and this is the current. It's an extreme market reaction here that has been seen on a shorter term basis. So I do think that it can be dangerous a bit here for investors to get into the game, sort of exiting positions while these stocks are trading at these lows. I mean, in many ways, this is the worst possible point to be exiting a position. I do think it's fair to say that most people that are in this stock are not day traders. We're not really looking for shorter term price movements with a stock like this. But the only main issue here is the fact that we could be in store here for a fairly slow turnaround. That could make investors exercise a significant amount of patience here while the company sort of reorganizes itself and deals with the longer term outlook that is likely to be developing here going forward. So, currently, this is a massive decline here. I would suggest that people don't take any drastic price movements quickly based on this information. I think that the dust needs to settle here a bit, and I do think that investors should be exercising a bit of patience here rather than panicking and closing positions prematurely. So here's the current market update for Intel Corporation. I will be doing a more in-depth video on the trading strategies later today.
Is currently available for a limited time
some more
for only
in-depth coverage of the
$9.99
earnings
per
report
month.
itself.
These
Here's
high
the current market
conviction
update for
investment
Intel Corporation.
strategies are
Stock
characterized
ticker
by
superior
INTC.
risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.